Opening hook 0.0 to 0.30. If you checked your bank account this month and didn't see any extra grocery payment from the Canada Revenue Agency, you're probably wondering what's going on. Maybe you heard from a neighbor or saw something online about an $805 payment, and now you're confused about whether you qualify or if you missed something important. You're not alone. Thousands of Canadian seniors are asking the same question right now, and today I'm going to walk you through exactly what this payment is, who actually qualifies, and what you need to do to make sure you're not leaving money on the table. Context and why this matters. 0.30 to 3 sa. Let me start by being very direct with you. There is a lot of confusion right now because information is spreading quickly, and not all of it is accurate. So let's clear this up right away using only official information from the Government of Canada. First, we need to understand what people are actually talking about when they mention an $805 grocery payment. This refers to the Enhanced Goods and Services Tax Credit, also called the GST Credit, or sometimes the HST Credit, depending on where you live. This is not a brand new program. The GST Credit has existed for many years as a quarterly payment to help lower and modest income Canadians offset the sales tax they pay on everyday purchases. What changed recently is that the federal government announced a temporary boost to this credit as part of affordability measures. This boost is designed to help families and individuals deal with the rising cost of groceries and other essentials. The $805 figure that's being mentioned represents the maximum amount that certain households could receive over the course of the year when you add up all the quarterly payments, plus any temporary enhancements. Now here's what's important for you to understand. The GST credit is not sent out as one lump sum payment to everyone. It comes in 4 quarterly installments throughout the year, and the amount you receive depends entirely on your income, your family situation, and whether you filed your tax return properly. The reason this matters so much to Canadian seniors is simple. Many of you are living on fixed incomes from CPP, OAS, and possibly GIS. Every dollar counts. If there's additional support available from the CRA, you want to make sure you're getting it. But you also don't want to be misled or spend time worrying about money you were never eligible for in the first place. Official Rule Explanation. 8. Let me explain exactly how the GST credit works, according to the Canada Revenue Agency. The GST credit is a tax-free quarterly payment made to individuals and families with low to modest incomes. The purpose is to offset all or part of the GST or HST that you pay throughout the year. You don't apply for this credit separately. When you file your annual income tax return, the CRA automatically determines if you're eligible based on your income and family net income from the previous tax year. For 2026 payments, your eligibility is based on your 2025 tax return. This is crucial to understand. If you haven't filed your 2025 taxes yet, the CRA cannot determine your eligibility for the current payment period. This is one of the most common reasons seniors tell me they're not receiving payments they think they should be getting. The basic eligibility requirements are straightforward. You must be a Canadian resident for tax purposes. You must be at least 19 years old, or you must be married or living in a common law relationship, or you must be a parent living with your child. Most seniors automatically meet these requirements. Now let's talk about the income thresholds. This is where the 805 figure comes into play, and it's also where a lot of confusion happens. For the 2026 benefit year, which is based on your 2025 income, a single individual with no children can receive the maximum GST credit if their net income is below a certain threshold. As of the information available from Service Canada and the CRA, that threshold is projected to be around $53,350 for single individuals. If you earn more than this amount, you may still receive a partial credit, but it gradually decreases as your income rises. Once your income exceeds approximately $64,946, the credit phases out completely for single individuals. For married or common law couples, the calculation is different. The credit is based on your combined family net income. The phase-out threshold is higher for couples, starting at approximately $69,644 in combined income, with complete phase-out occurring around $81,231. If you have children under 19, you receive additional amounts per child, and the income thresholds are also adjusted upward. Here's the important part about that $805 number. That represents the absolute maximum a household could receive if they qualify for the base credit, any supplements, and any temporary enhancements that the government announced. A single senior with no dependents and income well below the threshold would receive considerably less than $805. The actual amount for a single individual at maximum benefit is closer to $496 annually, paid out at approximately $124 per quarter. The higher amounts, including reaching that $805 figure, typically apply to families with children or couples where both the base amount and child supplements combine. I want to be very clear about this because I've seen some information online suggesting that every senior will automatically get $805, and that's simply not accurate. Your actual payment depends on your specific situation. Real-life examples, 8 is around to 12 plus. Let me give you some real-world examples so you can see how this works in practice. Example 1. Margaret is 68 years old, single, and lives alone in Ontario. Her only income is CPP and OAS, which together total about $28,000 per year. She has no other income and no dependents. Margaret filed her 2025 tax return in March 2026. Because her income is well below the threshold, she qualifies for the full GST credit. She receives approximately $496 for the year, which comes to about $124 every 3 months. Margaret gets her payments in January, April, July, and October. That's what she can expect, not $805, but $496 spread over 4 payments. Example 2. Robert and Linda are a married couple, both in their early 70s. Robert receives CPP and a small workplace pension. Linda receives CPP and OAS. Their combined annual income is $52,000. They have no children living at home. Because they're a couple, they qualify based on the family threshold. Their combined GST credit for the year is approximately $640, which is split into 4 quarterly payments of about $162 each. Again, this is not $805, but it's still meaningful money that helps with their grocery bills. Example 3. David is 73, widowed, and receives CPP, OAS, and a modest amount of GIS because his income is low. His total annual income is around $22,000. He also helps care for his 16-year-old grandson, who lives with him. Because David has a dependent child, he receives the base GST credit for himself, plus an additional supplement for his grandson. His total annual credit could be around $620, paid quarterly. The child supplement makes a real difference in his situation. Example 4, and this is where some people get confused. Susan is 65 and receives a good workplace pension in addition to her CPP. Her total income is $68,000 per year. She's single with no dependents because her income exceeds the phase-out threshold for single individuals. Susan receives no GST credit at all. She might hear about the $805 payment and wonder why she didn't get it. But the answer is simple. Her income is too high to qualify. This doesn't mean she's being treated unfairly. The program is specifically designed to help those with lower incomes who need it most. Now, here's a common misunderstanding I hear all the time. Some seniors think that if they qualified last year, they'll automatically qualify this year for the same amount. That's not how it works. Every year, the CRA recalculates your eligibility based on your most recent tax return. If your income changed, your payment changes. If you forgot to file your taxes, your payment stops. If your marital status changed, your payment adjusts. What to check, what to do. 12 instruas to 1630. So what do you actually need to do to make sure you're receiving the GST credit you're entitled to? Step 1, and this is absolutely critical. File your income tax return every single year, even if you have no income to report. I cannot stress this enough. The CRA uses your tax return to calculate your eligibility for the GST credit, the Canada Carbon Rebate, and several other benefits. If you don't file, you don't get paid. It's that simple. Many seniors tell me, I don't have enough income to owe taxes, so I don't need to file. That's incorrect. Filing your return is not just about paying taxes. It's about accessing benefits. Even if your only income is OAS and you're below the taxable threshold, you must file a return to continue receiving your GST credit and other benefits. If you haven't filed your 2025 tax return yet, do it as soon as possible. You can file for free using NetFile certified software, or you can get help from the Community Volunteer Income Tax Program if you have a modest income and simple tax situation. You can also hire an accountant or tax preparer if you prefer. Step 2. Check your CRA account online. If you haven't set up online access yet, I strongly encourage you to do this. Go to the CRA website, click on My Account, and follow the registration process. You'll need some personal information and details from a previous tax return. Once you're registered, you can see exactly what benefits you're receiving, when your next payment is scheduled, and what your payment amounts are. In your My CRA account, look for the section called Benefits and Credits. You should see the GST HST credit listed there along with your payment schedule. This will show you the exact dates and amounts for your upcoming quarterly payments. Step 3. Look for your GST.HST credit notice. After you file your tax return and the CRA processes it, they send you a notice telling you whether you qualify for the credit and how much you'll receive. This notice is sent by mail unless you've signed up for email notifications through My CRA account. Keep this notice. It tells you exactly what to expect for the entire benefit year. The notice will show your annual entitlement and break it down into the 4 quarterly payments. It will also show the payment dates, which are typically in January, April, July, and October. If you don't receive this notice within a few weeks of filing your return, or if you think the amount is wrong, contact the CRA. Step 4. Make sure your direct deposit information is up to date. The fastest and most secure way to receive your GST credit is through direct deposit into your bank account. If you're still receiving paper checks, consider switching to direct deposit. You can set this up through My CRA account or by calling the CRA and providing your banking information. Direct deposit means your money arrives faster. You don't have to worry about lost checks, and you don't have to make a trip to the bank. Step 5. Understand when to call Service Canada versus when to call the CRA. This causes a lot of confusion. The GST credit is administered by the Canada Revenue Agency, not Service Canada. If you have questions about your GST credit, your payment amounts, or your eligibility, you call the CRA benefits line, not Service Canada. Service Canada handles CPP, OAS, and GIS. The CRA handles tax-related benefits, including the GST credit and the Canada Carbon Rebate. The CRA benefits line number is 1-800-387-1193. Be prepared for potentially long wait times, especially during tax season. Have your social insurance number ready, as well as information from your most recent tax return. Step 6. Check your notice of assessment from your tax return. This is the document the CRA sends you after they process your return. Line 23600 on your notice of assessment shows your net income, which is the number the CRA uses to determine your eligibility for income-tested benefits, including the GST credit. If you think your net income is wrong, you may need to file an adjustment to your tax return. Common mistakes and warnings, 1630-20. Let me walk you through the most common mistakes I see seniors making with the GST credit, because avoiding these errors can save you a lot of stress and confusion. Mistake number 1, assuming you'll get the maximum amount you've heard about. As I explained earlier, the $805 figure represents the maximum that certain households with children might receive. If you're a single senior with no dependents, you will not receive $805. Your amount will be based on the single-person calculation. Don't set your expectations based on maximum figures that don't apply to your situation. Mistake number 2, not updating the CRA when your marital status changes. If you get married, enter a common law relationship, separate, divorce, or become widowed, you must inform the CRA. Your GST credit is calculated differently for singles versus couples. If you don't report a change in marital status, you could end up receiving the wrong amount, and later you'll have to pay it back. This is particularly important for widows and widowers. When your spouse passes away, your benefit calculation changes from a couple amount to a single amount, and you need to notify the CRA so they can adjust your payments correctly. Mistake number 3, not filing your taxes because you think you don't need to. I've said this already, but it bears repeating because it's such a common problem. You must file a tax return every year to continue receiving the GST credit, even if you have no taxable income. The CRA will not automatically continue your payments indefinitely without a tax return. After a certain point, they'll stop the payments until you file. Mistake number 4, giving up if your payment stops or changes. Sometimes payments stop for administrative reasons, not because you're ineligible. Maybe the CRA didn't receive your tax return. Maybe there was an error in processing. Maybe your direct deposit information was wrong and the payment couldn't go through. If your payment stops unexpectedly, don't just assume you no longer qualify. Call the CRA, explain the situation, and ask them to review your file. Mistake number 5, confusing the GST credit with other benefits. The GST credit is separate from your CPP, OAS, and GIS. It's also separate from the Canada Carbon Rebate, which is another quarterly payment many seniors receive. These are different programs with different payment amounts and different payment schedules. When you see money deposited in your account, check the description to see which benefit it is. Don't assume every deposit is the same thing. Mistake number 6, falling for scams. Unfortunately, whenever there's news about government payments, scammers come out looking to take advantage of confused seniors. The CRA will never call you demanding immediate payment. They will never ask you to pay taxes or fees using gift cards, Bitcoin, or wire transfers. They will never threaten to have you arrested if you don't pay immediately. If someone calls claiming to be from the CRA and pressures you for money or personal information, hang up. If you're unsure whether a call or letter is legitimate, contact the CRA directly using the number from their official website, not the number the caller gave you. Mistake number 7, not keeping copies of your tax returns and notices. Keep good records. When you file your tax return, keep a copy. When you receive your notice of assessment and your GST Credit notice, keep those too. If there's ever a question or dispute about your benefits, having these documents makes it much easier to resolve the issue. Future impact, 20-23. Now let's talk about what you can expect going forward, because understanding the timeline helps you plan and reduces anxiety. The GST credit operates on a benefit year that runs from July to June. Your payments are based on your previous year's tax return. So, for example, payments from July 2026 to June 2027 will be based on your 2025 tax return that you file in early 2026. Each year, the payment amounts are indexed to inflation. This means the maximum amounts and the income thresholds typically increase slightly to keep pace with the rising cost of living. The government announces these adjustments annually. For 2026, we're expecting the usual indexation adjustment, but I can't give you exact numbers for future years because those haven't been officially announced yet by the CRA. The quarterly payment dates follow a predictable schedule. Payments are typically issued on the 5th day of January, April, July, and October. If the 5th falls on a weekend or holiday, the payment comes on the next business day. Mark these dates on your calendar so you know when to expect your deposits. If the government announces any temporary enhancements or one-time boosts to the GST credit, as they've done in the past, to help with affordability, you'll receive that additional amount along with your regular quarterly payment. You don't need to apply separately for enhancements. The CRA adds them automatically if you already qualify for the base credit. Looking ahead to the rest of 2026 and into 2027, here's what you need to keep in mind. File your 2025 tax return as soon as you have all your income slips, ideally by March or April 2026. This ensures your July 2026 payment and subsequent payments are calculated correctly. If you delay filing until the summer or fall, you might miss payments or receive adjusted payments later. Watch for your GST credit notice after your return is processed. This tells you what to expect for the entire benefit year. Keep that notice handy and refer to it if you have questions about your payment amounts. If your income changes significantly from one year to the next, understand that your GST credit will adjust accordingly. For example, if you start receiving additional pension income, or if you sell an investment property and have a capital gain, your net income for that year will be higher, and your GST credit for the following benefit year might decrease or even disappear. This is normal. The system is working as designed, targeting benefits to those with lower incomes. Conversely, if your income decreases, perhaps because you retired or because you stopped working part-time, your GST credit should increase for the next benefit year, assuming your lower income brings you into the eligible range. One important thing to understand about future payments: the government periodically reviews and adjusts benefit programs. Sometimes they announce temporary boosts in response to economic conditions. Other times they make permanent changes to eligibility rules or payment amounts. Stay informed by checking the CRA website regularly or by subscribing to updates about benefits. COM Summary 23 Sasum to 25. Let me bring all of this together in a way that's clear and practical. The CRA grocery payment people are talking about is the GST credit, sometimes enhanced with temporary affordability measures. It's not a new program. It's a quarterly benefit that's been around for years to help lower and modest income Canadians offset the sales tax they pay. The $805 figure you may have heard represents the maximum that certain households with children could receive over a full year. Most single seniors will receive a lower amount, typically around $496 annually if they qualify for the full credit, paid in 4 installments of approximately $124 each. Your eligibility and payment amount depend entirely on your net income from your tax return. Lower income means higher benefits. Higher income means reduced benefits, or no benefits at all. This is fair because the program is designed to help those who need it most. To receive the GST credit, you must file your tax return every year, even if you have no taxable income. You cannot skip this step. Filing your return is how the CRA determines your eligibility and calculates your payment. Check your My CRA account online to see your payment schedule and amounts. Look for your GST or HST credit notice after you file your taxes. Make sure your direct deposit information is current. And if you have questions or your payment doesn't arrive as expected, contact the CRA benefits line, not Service Canada. Don't panic if your payment amount is different from what you heard someone else is getting. Everyone's situation is different based on income, marital status, and dependence. Focus on your own situation, not comparisons to others. And please, be cautious of misinformation. Verify everything with official sources. The CRA website is the most reliable place to get accurate information about the GST credit. Don't make financial decisions based on social media posts or rumors. Engagement prompt 25 Strabu to 26 Bast. I'd like to hear from you. Have you been receiving your GST credit payments regularly? Did you find the amount confusing when you first learned about it? Or maybe you've had trouble with payments stopping unexpectedly and you had to sort it out with the CRA. Share your experience in the comments below. Your situation might help another senior who's going through the same thing. If this information was helpful and cleared up some confusion for you, I'd appreciate it if you'd subscribe to the channel. We focus exclusively on Canadian government benefits for seniors, explaining CPP, OAS, GIS, and tax credits in plain language. Every time there's a policy change or payment update that affects Canadian retirees, we break it down clearly so you know exactly how it impacts you. Thank you for watching, and remember, when it comes to government benefits, knowledge removes fear. You don't need to worry if you understand how the system works and you stay on top of your filing requirements. Take care.